Hello, I'm John Persinos, Managing Director of Personal Finance and its parent website, Investing Daily. The latest issue of Personal Finance, dated June 26, is now in the mail and posted online. Here are the highlights of the investment advice that you'll find in your newsletter. In our first article, Ben Shepard looks at the silver linings amid European clouds. Economic malaise in Europe has created bargains among the region's battered but sound blue-chip stocks. Paradoxically, economic weakness throughout Europe is setting up solid buying opportunities on the continent. As with global companies in the rest of the world, those based in Europe have become increasingly reliant on emerging markets for meaningful portions of growth. Ben pinpoints select European blue chips that should continue to post respectable sales and earnings growth despite lingering woes at home. In the second article, I look at undervalued airline stocks that are poised to soar as industry consolidation and global growth provide a powerful new lift. The global airline industry is on a flight path for higher altitude this year as economic recovery fuels demand for travel among newly confident consumers. Despite the sanguine outlook for the airline industry, though, the stocks of the strongest carriers are trading at attractive valuations, making this a good time to grab a cheap seat on the sector's upward trajectory. I look at the three most promising airlines. Two are major carriers, and one is the best of the regional players. In the third article, Sula Stephanopoulos unearths two carbon fiber suppliers that should prosper as the aerospace sector's fortunes improve. The resurgence of the global airline industry is good news for the companies that supply airplane makers with carbon fiber materials. Carbon fiber composites are light but extremely strong materials that reduce fuel consumption and maintenance for the newest planes, while also providing for a roomier interior with bigger windows and better air pressure control. Sula pinpoints the best plays now in this fast-growing industry. In Growth Track, I explain how improving employment figures in the U.S., combined with expansion in key sectors such as energy, tell a compelling tale for investors. One of the most important indicators of economic health in the U.S. is the state of the employment market. And for today's stable job situation in the face of budgetary austerity, thank the Federal Reserve. The central bank's loose money policy has continued fueling the nation's growth, even as lawmakers in Washington do their best to step on the brake. Now, the Fed is intimating that it will curb its expansionary monetary policies, a looming shift that has investors nervous. Nonetheless, the indicators suggest that the stock market's bull run still has legs despite the recent sell-off. I examine the ramifications for our growth portfolio holdings, as well as my candidate for best buy in the growth sleeve. In Income Report, David Dittman explains that dividend-paying stocks are still your best bet to build wealth, regardless of whether interest rates rise. David makes the case that, over time, dividend-paying stocks have outperformed non-dividend-paying stocks, and companies that grow their dividends have done even better than those that simply maintain payouts. That's why the guiding principle of the income portfolio remains the same: to focus on high-quality businesses capable of supporting stable and growing dividends over the long haul. David also spotlights the latest best buy from the income portfolio. In Fund Focus, Chief Investment Strategist Philip Springer looks at all-weather dividend ETFs. Phil shows that with bonds under pressure, the right dividend vehicles will continue to perform well. As their historical performance shows, dividend ETFs lag the broad market during periods of rising prices, but they also hold up better during downturns. The high-yield, low-volatility approach makes it easier to stay invested during the inevitable ups and downs. Phil examines 5 of the most popular and liquid ETFs for U.S. dividend stocks. And in On the Money, John Reese asks the question, what would Benjamin Graham buy today? John applies his, quote, guru methodology to unearth some of the best stock picks now. He explains that Graham's overriding philosophy also dovetails with that of personal finance, which consistently counsels investors to put aside the market's vicissitudes and instead focus on the intrinsic value of a stock's underlying business. With the stock market at record highs, despite recent drops, what value stocks would Ben Graham buy today? John Reese pinpoints 4 stocks that meet or exceed Graham's time-tested criteria. It's all in your latest issue of Personal Finance, now in the mail and available online. I'm John Persinos, Managing Director, wishing you many happy returns. And please don't hesitate to post a comment or question on our website. Our team of investment analysts is here to serve your wealth building needs.